Good riddance to February. We are ready to say goodbye to the cold temperatures and the red numbers on the stock market. But when will we? A look ahead in today's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, my birthday is this month, but that's not the only reason I love March. I've also loved walking outside and not needing a coat the past few days. I've even put on shorts a time or two, and that gets me excited about leaving winter and entering spring. That's probably the best part about March as far as I'm concerned, when it happens. I have lived in Arkansas most of my life, and I know that it doesn't always happen. It can still snow in March. In fact, I remember a few birthdays with snow on the ground. A setback to my spring hopes can always happen, and the same can be true of the stock market. January and February were ugly, just like the winter weather. The S&P 500 was down 5.3% in January, followed by down 3.1% in February. So will we warm up in March? Well, historically, March is a good month. Over the past 20 years, it's the 5th best month of the year. Since 1950, it ranks 6th. Now, this year is a midterm election year, and historically, in most of those years, the market struggles through the course of the year, but March has been solid, up 2/3 of the time, and the 4th best month of those midterm years. Taking a look at a chart from LPL Research, a March like this one could be better. The first 2 months of the year have been negative 18 times since 1953. 10 of the previous 17 times, March was in the green. Of course, every year is different and has its own challenges. The challenges of 2022 have been compounded by the Russia-Ukraine conflict, which is still relatively new. We talked about last week how global events can shake markets in the short term, but they tend to recover in the longer term. And that's the important thing to remember as we enter March. We may still be in the short term. The GenWealth team has hundreds of annual reviews with our clients each year, and in the past couple of months, many of them are telling us they're trying not to look at their accounts much right now. Certainly, a diversified portfolio, which most of our clients have, has generally held up better than the overall stock market in the first 2 months of the year, but seeing your portfolio dip from a peak, even a little, is always hard to see. It's important to maintain perspective. This is a long-term ride, and inflation, rising interest rates, and now the Russia-Ukraine unrest is making this part of the ride really bumpy. Instead of looking at their account balances, our clients are looking at their plan. The plan is built to expect the short-term bumpiness. Just like in Arkansas, we expect colder temperatures to return in March before we get warmer for the long term. Thanks for watching.